There's been a lot of talk in the YouTube sphere and online about negative interest rates. Will we see negative interest rates? Are negative interest rates here? What in the world does this mean? So imagine for a second a world where negative interest rates, where banks would charge you to save your money and pay you to take loans. Like pay you right now, pay you to take a mortgage out. Do you imagine that world? Be like Back to the Future wackiness or something, right?
Roads? Where we're going, we don't need roads.
Or I travel in weird time and meet my mom when I'm a teenager or something. Imagine that world. Well, first of all, get it out of your head because it's not going to happen. No bank is ever going to pay you to take a mortgage out. But there's all this talk about negative interest rates right now. Why? Well, because the president is calling for it. Here's President Trump the other day tweeting about this and said, as long as other countries are receiving the benefits of negative rates, the USA should also accept the gift. Big numbers.
It's happening bigly.
Well, what the heck is he talking about? What is he talking about, big numbers? We've already tried this in other countries. Switzerland, just as an example. There's a number of other countries that have tried this as well. So we've already seen this in Switzerland. We've seen this in Japan. We've seen this in Denmark. We've seen this in Spain. And in Switzerland, it's been basically a disaster. The experiment has proven that having negative interest rates will not fix anything, because the idea is that the central bank would lower interest rates below zero, making their effective rate negative. Why? Why would they do this? The idea, the incentive, is that that would encourage the banks to get money out of their savings account. See, if it's sitting in the central bank, then they're having to pay the Fed interest. And that's like bad for them, right? Why would they want their money to be paying interest to the Fed? So instead, the idea is that it would encourage them to not have it sitting there, and they would be loaning it out to you. And right now, Jerome Powell says, no, we're not going to do that. So from the Federal Reserve in the United States, nope, we're not even considering it. It's not going to happen. So why all of this talk about this? Well, President Trump's saying that we need to do this. We need to get on board with this. Grover also disagrees with it. But getting on board with negative interest rates, this idea that banks could just keep pumping as much money as they can into the marketplace, they already are, thanks to where the Fed is currently keeping interest rates, near zero. So they already are pumping this liquidity into the market. It is not the answer that we see. Why? Because in Switzerland, as a prime example, they've been doing it for a number of years, and it's been a mistake. It has not worked. What has happened is that in Switzerland, the central bank can only keep the negative interest rates so low. And then what would happen is people would take all of their money out of the banking system. If negative interest rates got beyond that like 0.25% negative, I mean, how many of you would keep your money in a bank at -1%, -2% interest, where you're losing money every day on having that money in the bank? Everyone would take their money out of the bank, and they'd move to a decentralized system of currency like crypto or something else. It would destroy the entire banking system. So Switzerland has only been able to keep their negative interest rates just a hair under zero, because any more than that, and they know it would be a collapse. So it's just enough. It's like a needle in the sides of these banks. They don't like this little prick in the side, but they deal with it. So they're paying the central banks in Switzerland, Denmark, and Japan to hold their money. Because look, what are you going to do with billions of dollars? Can you put it in your garage? You need to store it somewhere. So you're paying them a service fee essentially for holding your money. Will it happen in the United States? The United States Federal Reserve says no. So then what's all this kerfuffle over the past few days online about negative interest rates are coming to the United States? Well, what they're talking about is the futures market. So there are a lot of people are already trading, buying and selling on the future idea that in early January of 2020, America will have negative interest rates in the same way that we bet on hog futures, right? Or corn futures or gas futures or oil futures, right? So what they're doing is they're betting, like Vegas style, that we will have negative interest rates by early next year. Well, the experiment in Europe has been a failure. Even though it's still there, the experiment in Europe has been a failure. So I don't believe we're going to see it in the United States, despite President Trump wanting it. And economists say it would crush us if we tried to do this in the United States. Now, one way that I see negative interest rates possibly coming as a tool in the Fed's arsenal is if these mortgages start to default, like I spoke about earlier. If we start to see widespread defaults on mortgages and the collapse of that sector because these banks are, all these defaults are piling up and banks are saying, I don't want to lend any money anymore. I'm done. I don't want to lend any money. Now the Federal Reserve could step in, apply negative interest rates to basically say, sorry guys, you got to get off that stove. You got to start lending money again. I know it's uncomfortable. It's really uncomfortable with all these defaults you're taking on, but you got to keep lending. You got to keep lending. That's one of the only ways that I see this working out. So it is one possible tool in their tool belt, but I absolutely do not see it happening. There is little, if any, evidence that negative interest rates actually would stimulate growth. And very often it doesn't even trickle down to you, the consumer. It really just stays at the bank level. So the retail borrower doesn't really experience this. But I will say that in many ways, negative interest rates in some way are already here. So from the Fed, they are not. We're near zero. Okay, so if anyone is telling you online that negative interest rates are here in the United States, that's a lie. They are not. However, because when you put your money, when you put this kind of currency into the bank and your savings account is like 0.1% return in your savings account, and inflation right now in the United States is about 2%, you're losing money. So anytime you put this money into a savings account right now, you're losing money every day. The value of $1 today is worth less tomorrow thanks to inflation. So while we don't have actual negative interest rates from the Fed, we have, in a way, artificial interest rates because inflation just continues to eat away at this. So what do? What's attractive right now? Well, bonds are not attractive. So U.S. Treasury bonds not attractive. They're near 0% for the first time in history. Well, where do we put our money? Into the money market? No. Where do we put our money? We keep it in cash right now? No, that's worthless. We need to be smart about our money and putting it into performing assets like real estate or other stable assets, which are a hedge against inflation, like gold and silver, and also crypto. I recently was telling you about Outlet Finance as an app that I've been using and testing with a 7.5% interest rate right now. If you go to morrisinvest.com/outlet, but morrisinvest.com/outlet, check it out. It's backed by crypto and it's at a 7.5% interest rate right now. That is more than a hedge against that 2% inflation. But remember, all of this talk about this experience right now with negative interest rates is a lie. We are not in a negative interest rate territory. What the Vegas bettors are saying is that by next year, we'll see negative interest rates in the United States. So don't fall for it. We are not at negative interest rates. And Jerome Powell says, no, we don't have an interest in doing it.
Just broadly speaking, how do you feel about the arguments for and against negative rates in the U.S. at this point?
So, Adam, let me start by saying that the committee's view on negative rates really has not changed. This is not something that we're looking at.
Even despite this, even despite the pressure from President Trump saying that we should have negative interest rates, we should accept the gift of big numbers. I don't know what he's talking about. I don't, because if we look at Europe, that it hasn't worked. So that's the experiment. Europe is the experiment right now, and it has not worked. I don't know what big numbers. I think what they're thinking is that the banks are just going to want to spend so much money, get money out there to people so they can borrow as much as they can. Well, if people don't have a job, how are they going to qualify for borrowing? How are they going to pay it back if they don't have income? This is why I come back to the answer being an injection of stimulus money into the American people's hands, a continuous, maybe $2,000 a month until we get out of this crisis. We have the ability to print currency and to stabilize our inflation rate right now. The Federal Reserve has been doing a great job of this. That's where we need to continue to be. Again, I come back to this, where negative interest rates will not fix the global economy. Just look at Switzerland. It's a fascinating read. I'll link to it in the description below and go through it. It's a little dense, but holy smokes, it has not worked. So there we are. That's the negative interest rate story. Don't believe the hype. We are not in negative interest rate territory, but it is worth noting that if you are saving money with this minimal paltry return of like 0.01%, you're not keeping up with inflation. You need to be smarter with your money right now. So if you get a stimulus check or other cash, think about putting it in a high yield savings account like that account I was telling you about, backed by something perhaps even more stable like crypto, putting it into real estate that produces cash flow and has always been a hedge against inflation, buying gold, buying silver. That's really it, folks. Because you want to put it in the volatile stock market, good luck with that. The only reason the stock market is happy right now is because of what the Fed has been doing. Buying up all this junk bonds and everything. You think if we go to negative interest rates, Wall Street will be happy? No. And you want your money tied up in there? No. So it's a really important time right now to be paying attention to what the Federal Reserve is doing, what is happening in the banking system. That's why we try to bring this to you on a regular basis to inform you about this. This is your money, folks. You cannot blindly, we teach you to have be empowered by your money. You cannot blindly listen to what these so-called Wall Street experts are saying because they want you to put their money in their system. You can't just put your money in a 401k and expect great returns. It does not work. The math doesn't add up. So there you go. That's the latest on negative interest rates. I'd love to hear your thoughts about that in the comments. Let me know and subscribe to the channel if you are new here.